Good morning, good afternoon, good evening, wherever you are in the world, and welcome to episode 52 of the ESG Show. Bit of a technical problem this morning, which means we're running 10 minutes late. Now, today we're talking about the infrastructure which supports the renewables revolution. Now, I've often thought that the only barrier to us winning the war against climate change is collective stupidity. Take our energy. The economics of renewables are so good that not only can they support the green transition, I think they can lead to cheaper energy. And yet we resist, like we are determined to look a gift horse in the mouth. Think of it this way, maybe there is such a thing as a free lunch. We can reduce our carbon footprint and simultaneously support the economy. Now, take these words from COP29 uttered by the Iranian Vice President, Shina Ansar. She said, "We cannot forget the fact that the current climate situation of the world is in the result of the industrial policies of a few developed countries, and developing states shall not be deprived of their right in developing because of what others have done." Once again, we emphasize that if this conference should intend to prove its goodwill in striving for a better future for all, while persisting on avoiding double standards to achieve meaningful actions to all countries to achieve these goals. Now, I don't think she's wrong, but I wonder whether Shina Ansar is right in the implicit assumption that you can't have economic development and environmentally friendly policies. I think you can have both. I think that the green tech is an opportunity, and as is the case with many disruptive technologies, it's an opportunity, especially for new organizations, to disrupt the dominance of older, larger organizations. And just as this is true with companies, I think this can be true with nations and for regions too. But there is a snag, and that snag is in the form of infrastructure. The renewables revolution can't do it all unless we build the infrastructure to support it. So let's get straight into it and quickly bring in this morning's guests. On the show today, we have Matthew Donen, Senior Equity Analyst at Morningstar. Hello, Matthew.
Hi, everyone.
So, Matthew, you penned a report entitled Decarbonizing Megatrend Offers Generational Growth for Electrical Equipment Manufacturers, which we're going to come back to shortly. Also on the show today, we have Tancrede Fulop, who's a senior analyst, who's also a senior analyst at Morningstar, with a specialized focus on the renewable sector. Tancrede penned a report entitled Europe Needs to Accelerate Grid Investment to Meet Energy Demand. Now, guys, I've got a question for both of you. Lack of infrastructure is a major hurdle into the transition to renewables, but how big a hurdle is it? Matthew?
Yes, huge is the short answer, I think. In fact, we actually think it's one of the biggest bottlenecks to achieving environmental targets that we've set. And I think the impact of this is twofold. One, if we look at the underinvestment that's occurred in the grid, if we go back to 2015, investment into renewables and investment into the grid was at level footing at around $300 billion annually. Fast forward to 2023, and investments into renewables have more than doubled since then, but investment into the grid has remained pretty stable. So we've had underinvestment into the grid, but also the grid is old and outdated. In Europe, the electrical grid was built over 50 years ago, well above its useful life of 30 years. And in the US, not too dissimilar, where the electrical grid was built over 40 years ago. And this just makes the transition to renewables even more difficult because you've got outdated infrastructure, and that doesn't even introduce the additional complexity of the intermittent nature of renewables. If you look at what the International Energy Agency requires us to do to be on track for net zero by 2050, they actually say that annual investment needs to increase by over 1.6 times this decade to be on track. So that just gives you a bit of insight and context into how huge of a bottleneck the electrical grid is.
Okay, thank you for that, Matthew. And Tancrede, same question. Lack of infrastructure is a major hurdle into the transition to renewables. How big a hurdle is it?
It's a very big hurdle because a big consequence of this underinvestments in the grid, it delays massively the energy transition because you have a ballooning amount of renewables projects that are waiting to be connected to the grid. In the introduction of this webcast, you showed a slide showing the waiting times in Europe for a wind plant, and they are very, very long. It's the same for solar. In Spain, it takes like 5 to 6 years to connect a new solar panel to the grid. In the Netherlands, it takes 4 to 7 years. So if we look at big countries across Western Europe, like Germany, the UK, Italy, and Spain, the amount of renewables projects in the connection queue is 200 gigawatts, which is huge. It is in Spain that it is the highest at 130 gigawatts. And because of massive underinvestments in Spain, even more than in elsewhere. And the amount of renewable projects in the connection queue in Spain, it's almost 3 times as much as the amount of installed renewable capacity in Spain. So when or if those projects will be connected, the renewable capacity in Spain will triple. And you have another big impact of underinvestment. It's congestion. The renewable plants online cannot produce at full capacity because the grid has not enough capacity. So when you have a lot of wind, for instance, or a lot of sun, sometimes the production of these renewables plants must be curtailed, and it is offset by power produced by thermal power plants, typically gas-fired power plants. So it's much more expensive and much more polluting. So a lot because of this congestion. There is a lot of additional CO2 emissions, and it's extremely expensive.
Okay, thank you. Now, normally when we do this and we get any comments, I can show them on the screen. But because we were running just a few minutes late this morning, we've had a comment and I'm not able to show it on the screen. So I'm just going to read it out to you instead. Alan Langston said, I think it is a lot more complex than just infrastructure, yet infrastructure is a major problem. We keep being told that it is not by various green industries like electric vehicles who say there is plenty of capacity in the national grid for everyone to own an EV. I would suggest the evidence doesn't support that. I know several examples where heavy industry has electrical curtailments when the domestic demand gets high, like during a hot summer when the alternating current gets turned up and down, or the air conditioning, I beg your pardon, like during a hot summer where the air conditioning gets turned up, down. While smoothing out demand on the grid makes sense, it also speaks to a lack of capacity. While batteries and battery farms offer a solution, how viable is that solution currently and long term? Also, I don't think the public are in favour of miles and miles of solar and wind farms. Production of those farms doesn't look very environmentally friendly. I'm not sure why ocean, tidal and river isn't playing a bigger part in green energy. Alan, if we get an opportunity, we'll come back to your comment later and I'll ask the question to our guests. But in the meantime, I wanted to crack on and I want to have a chat with Matthew for a few minutes. So, Matthew, if you just bear with me. Matthew Donen, let's leave that up there a bit longer. Matthew Donen is a senior equity analyst at Morningstar. Where he specialises in the industrial sector with a focus on wind energy within the renewable energy space. Based in Amsterdam, Matthew brings a wealth of expertise to his role, leveraging his profound understanding of financial markets to offer insightful research on the decarbonisation of the industrial sector. With credentials as a chartered accountant and chartered financial analyst, Matthew combines a strong analytical foundation with a passion for sustainable investment practices. So originally from South Africa, Matthew has previously held roles at Ned Group Investments and EY. Hello, Matthew. Good to have you on the show. And you're in Amsterdam at the moment, are you?
Yes, I'm currently based in Amsterdam.
Okay, and you're from South Africa originally. I do detect the accent.
Yes, that is correct, Michael. Well detected.
Okay, so I want to talk to you a little bit about. So Matthew has recently pinned a report, and the reports from Morningstar projects highlight significant growth for electrical equipment suppliers driven by the global energy transition. Over the next 5 years, revenue growth for these suppliers is expected to be twice that of forecasted GDP. This growth is projected to extend beyond 5 years if environmental targets are to be met. Major challenges include modernising a 40-year-old electrical grid and reducing building emissions to achieve net zero by 2050. The International Energy Agency suggests that annual investments in electrical infrastructure and building efficiency must double by 2030 to meet these goals, increasing demand for essential electrical equipment. Schneider Electric and E.On are well positioned to capitalise on increased investments, with expected 5-year annualised EPS growth of 10% and 15% respectively. While competitors also have opportunities, their diverse operations might dilute their focus on the energy transition. Additionally, global stimulus packages and strict regulations are anticipated to drive investments in decarbonising buildings and the power sector, collectively responsible for half of global greenhouse gas emissions. So, Matthew, I wanted to ask you, so the International Energy Agency suggests that annual investments in electrical infrastructure and building efficiency must double by 2030. Can that happen?
It certainly does look very difficult at the moment, and I alluded to a bit earlier the underinvestment that we've seen in the grid, where in 2015 it was $300 billion annually, and it's pretty much stayed stable there. I'd say one almost positive factor is that the call to action is slowly beginning to be heard by utilities, both in Europe and the US. And a lot of that investment that we expect going forward is largely being triggered by favorable stimulus. So in the US, we actually expect that investment into the grid will increase by over 40% during the next 5 years. And that's largely being catalyzed by the Infrastructure and Jobs Act that was introduced at the end of 2021, which has really catalyzed investment by the US electric utilities, who have set very ambitious growth investment targets there, with the majority of that investment focusing on modernizing an outdated grid to better accommodate renewables, but also to harden the grid and improve its resilience from an increase in extreme weather-related events that have caused an increase in outages in the US. In Europe, we're seeing similar, almost favorable policy where almost a year to the day, an action plan for grids was introduced, targeting about 500 billion euros of investment during the next 5 years. And if we put that into context historically, that's more than double the previous 5 years. So there definitely are steps in the right direction, but achieving that target that the IEA has set to be on track for net zero certainly does look extremely unlikely.
All right, thank you for that. And so, and what electrical equipment is required for the energy transition?
So the most widely used equipment that will be required is high and medium voltage electrical switchgear and power transformers. And basically, we're seeing a shortage of supply because of the high demand for this equipment. In fact, the demand is so high that the Fed in the US has cited electrical equipment as being one of the main contributors to some of the inflation that we saw last year. And this is basically contributing to the record margins that electrical equipment suppliers are seeing because of the strong demand and the lack of supply, which comes back to that report that I wrote where we think the electrical equipment suppliers are actually enablers of several growth themes, including the energy transition, building efficiency as well, which will also require low voltage electrical equipment. If you think about the building of the future, it's going to have EV charging stations, it's going to have solar panels, basically a lot more electrical content. You're going to have an electric heat pump instead of an electric boiler. And that's all placing significant demand for electrical equipment that is widely needed and is one of the big bottlenecks in modernizing and updating the grid to achieve our environmental targets.
Okay, so it's interesting that you're saying that the Fed has actually cited the increase in electric equipment as a factor behind inflation. Now, as someone with a background in economics, I'm interested. Can free markets fund the infrastructure, or is government support required?
Yes, good question. So, I mean, there's a famous saying by Charlie Munger, who was the right-hand man with Warren Buffett at Berkshire Hathaway, who says, "Show me the incentives and I'll show you the outcome." And I believe that the purely relying on things like investment payback periods is not going to be enough to drive the significant investment that we need into modernizing the electrical infrastructure and improving investment into building energy efficiency that is required. And it goes back to that favorable stimulus and accommodative, almost government policy that has really acted as a trigger to catalyze investment. In Europe, for example, if we look at the European Green Deal that was introduced in 2019, investment into building energy efficiency has increased by over 80% since then. And that's largely been catalyzed by the introduction of the European Green Deal. And there's even further strict regulation coming into play, particularly around buildings, where I'm based in the Netherlands. An office building needs to meet an energy label C by 2030 in order to be rented out. Otherwise, building owners are going to be left with stranded assets. So that's another almost act of government policy that's really going to trigger and incentivize investment into building energy efficiency. And then perhaps on the grid side, going back to what I mentioned in the previous question, where the Infrastructure and Jobs Act and the action plan for grids is really being the trigger and catalyst towards driving the investment. So I do believe that if we go back to that quote that I started with, you really need to have some sort of incentives for the private market to generate an attractive return to drive the necessary investment. Simply relying on investment payback periods is helpful, but it's not going to be the big catalyst that will drive the change that we need.
All right. Okay. Now, another factor here, of course, is the rise of AI, data centers, and the impact that that's having. You know, the huge amount of energy implications. So, what is the carbon footprint of data centers and AI, do you think? And can we kind of get around that by simply powering data centers and AI from renewable energies, do you think?
Well, I mean, that's the billion-dollar question at the moment. And if you look at the studies, a modern-day data center consumes over 50 times the amount of electricity as an office building per square foot. And initial studies have actually shown that generative AI and using AI as a search feature consumes 30 times as much electricity as a Google search. So the big question here is, what energy source is going to fuel that electricity growth? Is it going to be renewables, gas, nuclear? And at the moment, we're seeing a bit of all of it. If you look anecdotally at the examples that Amazon, Microsoft, Meta, they've all entered into power purchase agreements with a lot of the electric utilities in the US. Microsoft, for example, signed a $10 billion deal with Brookfield to help develop renewables as part of being a contributor to its supply of energy within a data center. But we've also seen examples where Microsoft are teaming up with suppliers of nuclear and gas. And I guess a combination of all three is going to be the likely outcome, given the fact that data centers need to run 24/7 and makes it very difficult to completely rely on intermittent renewables. But that said, these same businesses that are investing heavily into data centers also have set themselves very strict environmental targets. So we think this is definitely a growth driver for renewable energy generation. But once again, that will only occur if we see that big modernization into the grid infrastructure. As Tancrede said, because of the underinvestment into the grid, additional power generation is left stranded unless we improve the modernization of the infrastructure.
Okay, thank you for that. We've had Tancrede. I'd like to have a brief chat with you now, if that's okay. So I'll say goodbye to you, Matthew, and welcome you back in a few minutes' time. So Tancrede is a senior analyst also at Morningstar with a specialist focus on the renewable sector. With a specialized focus on the renewable sector, with extensive experience in analyzing market trends and the impact of global decarbonization initiatives, Tancrede offers deep insights into the role that renewables play in transforming the energy landscape. His strategic analysis aids investors and stakeholders in navigating the complexities of the renewables space. As a CFA charter holder, Tancrede combines a rigorous analytical approach with a passion for sustainable energy solutions, making him a thought leader in the field. Originally from France, Tancrede has previously held roles at Schlumberger, Raymond James, EY, and HSBC. Now, his new report says the European Commission has unveiled an action plan calling for 584 billion euros in grid investment by 2030, offering significant opportunities for European utilities. This plan aims to double grid investments over the next 5 years, although these investments won't completely solve existing congestive and connection delays due to past underinvestment. They're expected to drive earnings and dividend growth for utilities, highlighting a key sector theme for the coming years. Regulators are increasingly allowed returns across Europe to encourage investments and adapt to a higher interest rate environment, which benefits utilities. Concurrently, the anticipated decline in interest rates should support favourable spreads, with grid allowed returns traditionally advantageous for utilities. At a pivotal moment in the energy transition, the grid continues to be a major bottleneck. Despite a surge in the renewable energy investments, grid development has lagged, resulting in costly congestion and delays. The European Commission's investment plan provides a unique opportunity for utilities such as SSE and E.On, which are poised to capitalise on their strong financial positions and strategic advantages to deliver substantial shareholder returns. So Tancrede, tell me about the EU's investment plan. What does this involve?
Yeah, so the European Commission launched this in light of all the issues caused by years of underinvestment that we have been discussed. Last year, 1 year ago exactly, the European Commission launched this action plan for grid, calling for doubling the grid investments in the European Union over the next by 2030. So this and national regulators and utilities are responding favorably to this initiative, and looking at the European utilities that we cover with material exposure to the electricity grid, we expect them on a median basis to double their annual investments in the electric grid in Europe over the next 5 years compared to the previous 5 years. So as you mentioned in your introduction, this will support earnings and dividend growth of European utilities. So it's
Okay, thank you for that. Now, is it enough? You know, the EU's got this investment plan. Is that sufficient, or will more still be required?
It's not enough, but it will help. If you look at, so I discussed earlier the congestion issues when you have capacity, the grid capacity is too low compared to full renewable capacity, and quite often this is a geographical issue. If you look at Germany, for instance, you have a lot of wind plants in the north, also offshore wind plants in the North Sea, and the bulk of most of the electricity demand is concentrated in the south, where there are more industries. And now you don't have enough transmission lines between the north and the south, so you have a lot of congestion. But Germany, as part of the EU plan, will build 2 big transmission lines between the north and the sea after years and years of delay. So this will increase the congestion. But if you look at other countries, so at the UK, it's not part of the European Union, but it faces the same challenges. So high renewable growth and stalled grid investments, and you have a similar problem in the UK with a lot of wind plants in Scotland, whereas the electricity demand is concentrated in the south of England, and you have a big lack of transmission capacity between Scotland and England. So there is massive congestion issues. Now, in the UK, the regulator launched a plan which is called Accelerated Strategic Transmission Initiative. So there will be like 4 transmission lines to be built between the England and Scotland. Each of these lines will be 2 gigawatts, so total will be 8 gigawatts of additional transmission capacity between England and Scotland. But the thing is, in the meantime, given the current pipeline of projects, there should be 20 gigawatts of additional wind plants in Scotland. So plus 20 gigawatts of wind capacity, plus 8 gigawatts of of transmission capacity, you have an increase in the capacity shortfall of 12 gigawatts. And if we look at if you look through 2030, by 2030, only 2 additional lines will be commissioned because it takes a lot of time to build those long transmission lines. So two lines of 2 gigawatts each, so it's 4 gigawatts additional by 2030, and you will have those 20 gigawatts, so 16 gigawatts additional shortfall in 2030. And we modeled that this will increase the amount of curtailed power massively. It will surge fourfold. In terms of cost, the congestion cost in the UK amounted to £800 million in 2022, and we expect them to surge almost fivefold by 2030. And as I mentioned before, this curtailed renewable power has to be offset by additional power produced by gas-fired power plants. So we calculate that this will lead to additional 5 million of tons of CO2 emissions annually by 2030. So not enough in the UK, because again, renewable is just growing too fast.
Okay, so can we get your crystal ball out for a moment, and how can we overcome it? Can we achieve it? And if we can't achieve it, how close can we get, do you think? What do you think is realistic?
So there is this time lag, so it will get worse before it gets better. So what will help this? Yeah, more grid investments, but also maybe a change of approach and of policy to connect new renewables, because now the way that renewables developer apply for connections, they can apply anywhere, and there is not incentives to apply in areas where there is less congestion, for instance. So that does not help. You have this ballooning connection queue. And also, so far, an issue in the UK is what developers applying for a connection to the grid. It was a very loose policy. It's almost like anyone could apply for a connection, so that also artificially increased the connection queue. So the answer is a change in the policy of for the process of the application of renewables developers to connect to the grid, more investments. So a more sync approach between a grid rollout and renewables rollout.
Okay. All right. Now I've got $1 trillion question for you. Not $1 billion, $1 trillion question for you. It's 100% renewables viable?
With existing technologies, no. So currently, globally, we are at 12% solar and power. Getting to 50% will be a huge push. And also, so in Europe, we are in advance compared to the rest of the world in terms of renewables penetration. We have this connection issue that really kicks in above 40% of solar and wind share into the grid. And if you look at there is an expert, Thundersaid Energy, they said that it will likely peak out the share of solar and wind at 50-55%. Then you have a huge curtailment, so congestion kicking in, and the highest that could be reached is probably 65-70%, with a lot of demand shifting and batteries backstop.
Okay. All right. Okay. So now I'm going to welcome back Matthew. Now, I don't know whether I'm the only person that's aware of this, but I was reading a very obscure publication the other day, and I discovered something had happened in the United States last week. Something about an election, voting a new president or something. I don't know whether anyone else knows about this, but obviously they do, Matthew, because you spotted an article about this very same topic. Donald Trump's election victory deals blow to US clean energy industry. That's according to the Financial Times. So Matthew, what are your thoughts about that? What does all this mean for the green transition?
So in the long run, we actually think that the energy transition is going to happen, regardless of who's in charge of the White House or any country in the short term. And that's largely driven by we seeing increasing reliability of renewables, improving technological innovations, and lower costs, most importantly. So that's what we expect over the long run. In the short run, there are going to be some hurdles. There are big talks about repealing the Inflation Reduction Act, which we don't expect a full repeal being the most likely scenario, but a partial repeal, which would mean that offshore wind projects take longer to be approved or aren't approved. That's certainly going to impact the short-term outlook for the energy transition. Then you've got the added impact of tariffs. So one of the companies I also cover is Vestas, which is the world's largest manufacturer of wind turbines. What happened during Trump's previous tenure was he imposed a lot of tariffs on wind turbines. So that's another impact that affects the supply chain of the energy transition and will ultimately impede some of the growth in the short run that we had previously anticipated.
All right, okay. So I think we know what Dawn thinks about the result of the US election here. I mean, it does seem to me that regardless of what President Trump says about climate change, the migration to green technologies is happening anyway, as you said. You can dig for oil as much as you like, but the economics of solar and wind are so compelling that they're going to happen anyway. Matthew Tancrede, do you agree with that? Is it going to? I mean, you kind of took us in that direction anyway, slightly, Matthew. Tancrede, what are your thoughts about this?
Yes, economically, solar and wind are economically very competitive. If you look at their levelized cost of energy, which is the KPI to measure to compare the competitiveness and the cost of different sources of power, they are very competitive. Of course, their economics will be impacted by if the Trump administration were to impose a lot of tariffs, which they will probably do. Then, so short-term impact negative for sure. Then there is a big difference. There is difference between solar and wind, as I guess most of people are aware of. Elon Musk is a big supporter of Trump and played a key role in the campaign. And I think a recent tweet of Musk, like yesterday or so, he said that solar power will be the first source of electricity soon. So he's very in favor of solar. And when you look at what Trump or his vice president said, they are extremely critical about wind, onshore wind, even more on offshore wind. So offshore wind probably a very negative impact in the short term. This morning, the German company RWE announced that they will sort of pause investments in US offshore wind, and instead they will do some share buyback. So potentially in short term, very negative impact on offshore wind, a bit less on onshore wind, and solar should continue to grow even with tariffs. And in terms of the $1 billion question is in the Inflation Reduction Act, there is this tax credits for wind and solar. An early phase out is likely, but more likely for wind than for solar. Because if you stop importing solar panels from China, construction costs will be higher. So if at the same time you also repeal the tax credits, it doesn't make sense to build a solar plant anyway. So if they want to keep solar growing, they will likely. My take is that they will keep credits in place for solar. So solar should continue to grow, and wind in the short term should slow down. But again, as Matt said, if you look at the previous Trump administration, solar and wind growth was quite high.
Okay, I mean, solar is quite complementary to. Wind is quite complementary to solar, though, isn't it? Because it's often windy when it's not sunny, and you certainly don't get much sun at night time, but you can get a lot of wind at night time. So, I think we need both for the renewables transition, don't we?
We do, but what is very complementary to solar panels is a battery, utility scale battery, because you can store the electricity generated during the sunny hours, and to keep it to release it at night. And Tesla is also a big producer of batteries.
Okay, all right. So I often think that that climate change is a little bit like a disruptive technology. There's a great theory to explain how disruptive technology works, which I'm sure many people are familiar with, called Innovator's Dilemma from the late Clayton Christensen. And one of the findings of the theory is that it is often the techies, those engaged in the nuts and bolts of technology, that spot this new disruption and urge the company to go down their route. And it's actually often the marketing people who dismiss it. And they say things like, oh, these new laptops, these new 5.5 disk drives, these electric cars, these touchscreen phones, they're just toys. And I think the equivalent of that when we're talking about renewables is when people describe wind turbines as windmills, not describing them as toys as such, but a bit quaint and a bit nice, whereas in fact they're quite high tech. Now, somebody I once talked about disruptive technology. So there are 3 things you must do if you don't want to be disrupted, which is disrupt or be disrupted. He said, if it isn't broken, break it, and cannibalize or be eaten. So a lot of companies, they're terrified of changing, so they're going to cannibalize their own product. Well, he said, well, you cannibalize your own product or you'll get eaten. And I think there's an analogy there with some of the arguments vis-a-vis fossil fuels versus renewables. Do you think supporters of fossil fuels are slightly stuck in the past, especially the ones that are very dismissive of renewables? What do you think? I'll ask both of you that question.
Well, I mean, back to your innovator's dilemma almost argument, you saw a lot of the oil and gas producers begin to pivot and strategically shift towards renewables. And that was actually causing a huge bidding war in obtaining, getting the rights in the bidding auctions to produce renewables. And we're slowly starting to see a lot of that unwind. A lot of the oil and gas producers are refocusing back on their traditional fossil fuels. Look, one of the things that we're seeing is record electricity growth, and that needs to come from somewhere. And we've got the issues with modernizing the grid that we've alluded to. Renewables, we still need some advancements in the technology, particularly in the areas of battery storage, and similarly to what Tancrede alluded to, where in some regions we might have a cap in terms of the amount of solar and wind that we're able to generate, with at the same time supplying consistent energy, given the intermittent characteristics of wind and intermittent characteristics of wind and solar. But the point still remains, renewables have definitely become a lot more reliable. You look at wind turbines, for example, a lot of them are bigger than most of the skyscrapers in New York City or whichever major city in the world. They've become extremely more powerful, more effective, and that's helped contribute to the lower costs. So being completely dismissive of renewables is definitely not the right approach, and is a bit archaic in thinking. But there still needs to be some significant investment into the storage technology and batteries, for example, in order to be fully reliant on renewables.
Okay, and Tancrede, anything to add to that?
Yes, if we look at power producer, I don't think the innovative dilemma applies, because in Europe, but also in the US, if you look at the evolution of the power generation mix of European utilities, used to be extremely thermal with a lot of gas and coal in their power generation mixed, and they transitioned massively from thermal to renewable. So in Europe, there is a big incentive of the carbon price. You have to pay for the CO, for power producers have to pay for CO2 they issue with their thermal plants. But in any case, you see the same in the US, where there is no carbon market, because, as we said earlier, the economics of wind and solar in terms of LCOE are there. It's cheaper, and also sometimes it is said that gas it's an energy, it's a transition energy. So what you see in Europe, gas-fired power plants are very complementary to renewables. I mentioned the congestion issue and curtailment. So when there is not enough grid capacity and renewable power must be curtailed, it is offset by power from gas-fired power plants. But also when weather conditions are not favorable, for instance, now in Europe there is no wind and it's very cold. So in this situation, the spot power prices will spike, and then it's the grid operator will call down gas-fired power plants to produce power. So in this case, it will make a lot of money. So in Europe, you have some pure renewables players, but you have a lot of diversified utilities which have solar and wind plants, but also CCGT. So they make monies in every situation. When there is wind, their windmills produce a lot, and when there is no wind, like now, spot power prices spike, and they make a lot of money with their gas-fired power plants.
Okay, thank you for that. Matthew's had to dash, but thank you for your. Well, he's still here. Thank you for your time today, Matthew. Thank you. Tancrede, I just got one more question for you, and then we'll pack up. You spotted this article in the Financial Times. UK approves 5 subsea cables to boost clean energy supply. Can you just tell us just a little bit about that?
Yeah, so with more and more intermittent renewables power in the power system, it's very critical to have more interconnections in Europe. So you have more flexibility. So when there is no wind now dominates in the UK, and when there is no wind, they could import more electricity from France, for instance, where there is a lot of nuclear power, excess nuclear power. And conversely, when there is too much wind, they could sell it, transport it to continental Europe. So it's very important and critical, and if we want to increase the share of renewables in the power system.
Okay, well, thank you very much for that, guys, and thank you for your comments today. That's very much appreciated. I'll see everybody next week when we're looking at generative AI and ESG. And thank you very much.
Thank you.